GST. Is it a new tax or something new in the world? Certainly not. GST is already in existence since 1954, and the first country which adopted GST was France. That way we are very late, because till date more than 160 countries are already following GST. That way India is very late. Of course, the rate of taxation differs from country to country. As far as the rates of tax are concerned, we may be higher, but we are far behind many other countries which are already in GST. So when 160 plus countries are following GST, you can say it is almost in the entire world it is the GST, not like the tax structure that we had before. And for bringing the GST, constitutional amendment was needed. Why? Why amendment in the constitution? Just to give you an idea, that the position before amendment was, as per constitution, before amendment for GST, this is, I am talking about situation prior to GST, as far as goods and services were concerned, goods and services, in goods also there was manufacture and trading. As far as manufacture is concerned, except a few things, in this first comes alcohol for human consumption. Only central government was entitled to levy and collect excise duty. Very few articles were there which were for the state government. First example, alcohol for human consumption, then narcotics, those kind of examples. As far as trading was concerned, trading again divided in two parts. This is intrastate supplies and interstate supplies. For intrastate supplies, only state government was having the right to collect tax. For interstate supplies as well as for all the services, these are also covered here. For these, only central government had the right. This was the position before introduction of GST, right? But by introduction of GST, lots of things have changed. Now, on the goods, again the state government, central government both are having the right, plus on the services also state government, central government both having the right to collect the tax. So lots of amendments were required. So when I come to the constitutional part of the chapter, I will talk about important amendments. Not all the amendments, because lots of amendments were there which were necessary for giving effect to the GST provisions, but I'll talk about only the important provisions. Okay. Now, as far as the GST is concerned in India, the first time the concept was introduced in the year 2004 and that was Kelkar committee. They recommended, the Kelkar committee recommended that GST should be introduced in India. From 2004 up to 2016, governments were just struggling to introduce GST, because for bringing the GST, all the state governments should come together with the central government, have a uniform opinion, only then this is possible, otherwise not, right? And before bringing GST law, constitution amendment was needed, right? So constitutional amendment bill was brought in, which was later on passed as Constitutional Amendment Act 2016, Constitutional 101 Amendment Act. So this amendment is 101st Amendment Act 2016 for Constitution of India. So here you can say that Constitution (101) Amendment Act (2016). This brought in the major changes. Article 246A, 269A, 279A. These are major amendments in the Constitution which paved the way for bringing the GST. And these all amendments are through the Constitution 101 Amendment Act 2016. Right? But once this amendment was done, then the GST law required to be approved. The GST law was approved by the Parliament on 29th of March 2017. GST laws approved by Parliament. It means we are talking about CGST, UGST and IGST on 29th of March 2017, and in the month of April, on 12th April, received the assent of President of India, 12/4/2017. This is received assent from the President, and then it became law, right? So this is just the journey about the Constitution, what are the legal changes required to be made. So the very first change was required in the Constitution itself, and that has been done through the Constitutional 101st Amendment Act 2016, and the major changes therein are by introduction of Article 246A, 269A, 279A. GST law was passed by the Parliament, that is CGST, UGST, IGST Act on 29th of March 2017, and those received approval from the President on 12th of April 17. Okay, so this is the background about the legal changes. In the chapter itself, there is a separate portion about the constitutional amendments. On that we will come little later. Right now we are talking about the concept of GST. Concept of GST. So GST, this is a value added tax. Now this value addition may be by any process, or it may be a complete manufacture, or it may be only because of trading, or it may be because of services. Whatever be the mode of value addition, in the supplies of goods and services, goods are only movables. Immovable is not subject to GST. Services, all activities are services except those which are listed in Schedule 3 of the CGST Act. Right? So here I can just explain you what is the goods and services. Goods and services. This is just an introduction. Formal definition we will refer later on. Here we can simply say all movables and includes the things which are attached to earth but required to be separated under the contract of supply. And services are all activities except those which are listed in Schedule 3 of CGST Act, right? So this is not applicable on immovable property. But you can ask me a question, what about the construction activity? GST is applicable there. So friends, in brief, I can tell you that once the completion certificate has been obtained for the property, then only it becomes immovable property. Prior to that, it is a contract of service and therefore GST is applicable, right? So that also I'll write in brief, because some of you may have a reason for confusion. So I can write construction, before issue of completion certificate and after issue of completion certificate. So before issue of completion certificate, construction is a contract. It is a contract of service, and this becomes immovable property. Being a contract of service, GST is applicable. Being immovable property, there is no GST. Nowadays you can see lots of advertisement given by the builders in the newspaper, not affected by GST or no GST, because they have already obtained completion certificate and that has become immovable property. Okay. So first thing is, GST is a value addition tax, right? Now, when the GST becomes payable, liability to pay for this, I can draw a chart for goods and for services. In relation to goods, we have specified states and remaining India. In the specified states, we have Jammu, Kashmir, Himachal, Uttarakhand, and then we have other states from northeast, that is starting from Assam, Arunachal, Mizoram, Tripura, Nagaland. All those states are covered here, right? So in the case of goods in specified states, if a person achieves a turnover of rupees 10 lakhs in a financial year, he becomes liable to pay GST. Liable means thereafter it is compulsory, before that it is optional. In remaining part of India, this limit goes to rupees 20 lakhs. Right? Same thing applies for services as well, right? But in case of goods, there is another thing available, that is composition and non-composition. In case of composition, the rate of tax is fixed by the government, and on the entire turnover tax is payable at its reduced rate, but during that period when the reduced tax is payable, the person under composition scheme is not entitled for any input tax credit. Not entitled for any input tax credit. Right. Now for the services also the bifurcation of 20 lakhs, 10 lakhs is applicable. 20 and 10, 10 is for specified states. Right. Now in this case, composition scheme is available for supply of food and beverages. In nutshell, you can say these are hotels and restaurants. Only them. Otherwise, for the service provider, composition scheme is not available. Right. So during composition, any manufacturer or trader or service provider is not eligible to avail input tax credit. The concept of input tax credit I'll explain you a little later. Right. And when the composition scheme is not opted, they have to pay regular tax, and before they pay tax, they are entitled for input tax credit. And the objective of giving the tax credit is to ensure that there is no cascading effect of the taxable event happening every time. Right. So let us take an example from manufacturer. From the manufacturer, the goods are going to the wholesaler, the first supply. From the wholesaler, it is going to the distributor, that is second supply. From distributor, it is going to the retailer, that is third supply. And from retailer, it is going to the consumer, that is fourth supply. So there are 4 taxable events. Right. So when manufacturer is selling the goods to the wholesaler, he is charging GST. The wholesaler will take the input tax credit of the GST paid. When he supplies to the distributor, he will again charge from the distributor. But for paying the tax to the government, whatever tax he has already paid to the government, that much amount will actually be reduced. Right. So this concept, of course, you understand very well. This is just an elaboration on that point, that this is a continuous system of input tax credit. Right. Provided the person is liable to pay the GST on his supply, except in case of composition scheme. So I can draw a small chart for that also. Input tax credit. Input tax credit, you can put it this way. This is under composition and under regular case. During composition, no input tax credit is allowed, and in this case, tax credit is allowed, in nutshell. Right. And the person who is not liable to pay tax, right, under composition he is liable to pay tax but no GST, because the tax rate is substantially less. In the regular course, he is to pay regular GST, therefore full credit will be available. So person who is below the threshold limit, that is 20 lakhs and 10 lakhs, he is not liable to pay GST and not eligible to avail credit. But if the supplier who just is starting a business, he choosing to avail credit, he will have to have registration, and then he will have to pay GST on supply even for the very first turnover of rupee 1. Right. So that is the choice. So up to threshold limit, it's a matter of choice whether he wants a registration or he does not want a registration. But if he is opting for registration, then payment of GST becomes compulsory, and at the same time he becomes entitled to avail input tax credit. Okay, so this is in nutshell what the GST system is. Now we said if a person is liable to pay GST, then only he can avail credit, right? Here we can write an exception. And exception is zero rated supplies. Zero rated supplies. What are zero rated supplies? Number one, actual exports. I have added the word actual because there is a deemed export also, and deemed exports are not subject to zero rated supplies. Number two, supply to SEZ unit or developer of SEZ. These are called zero rated supplies, means no GST is payable. So here I have given the title exception. In these cases, supplier does not pay GST but eligible to avail input tax credit. This is an exception. Generally, in the previous chart, I said if the person is liable to pay GST, he is entitled to avail credit. This is an exception. Zero rated supplies. So zero rated supplies are actual exports. So underline the word actual, right? Because deemed exports are not covered in this. Another is supply to a SEZ unit or to the developer of SEZ. In that case, supplier does not have to pay GST, but he is entitled to avail input tax credit. Right? Now, getting back, the position before GST, multiple taxes, multiple taxable events, multiple registrations, multiple returns, multiple assessments. It was never in this story for an RCC. The issue was whether the supplier should do the business or he should do the legal compliance. By introduction of GST, lots and lots of taxes have been merged into one. Central excise, service tax, state VAT, entertainment tax, entry tax. These are few examples only. Lots of other taxes have been merged. So that much headache for the assessee or for the supplier has been removed. Initially, certainly we are having certain problems in the practical, but as when the system gets smooth, all the problems will evaporate. And then the people will realize how simple this tax is, that only by complying with one law, how many headaches have been taken away. But of course, there has to be a proper compliance. Then only there is going to be a relief, otherwise not. Right? Now in GST we have dual GST. There is dual GST. Dual GST means, let me explain this. There is interstate supply and there is intrastate supply. Interstate supply, this includes imports. interstate supply, this is subject to IGST. And intrastate supply, this is subject to CGST, SGST or UGST. Right? Now before I go into the details, first is I'm writing one line. This is destination based tax. Destination based tax. So when the goods are supplied, where the goods are being supplied, that state will have the right to retain the amount of tax. So the central government has been given a right under the Constitution of India. Remember the words. The central government has been given the right under the Constitution of India to decide when a supply will set to be in the course of interstate supply. The central government has got the right when a supply is said to be in the course of interstate supply. Right? And the government central government itself is having the right to levy tax on that. Then Constitution further says the amount of IGST collected by the central government on interstate supply is required to be appropriated between the central government and the state government, and the proportion of appropriation is going to be decided again by the parliament as per the recommendations of the GST Council. So every interstate supply, right? So what will be the place of supply? That is going to be decided again by the central government as per the rules. And we are going to talk about those provisions also in the later part of the our coverage, right? So this is one about the dual GST, right? Now UGST, this is applicable for union territories, that is Chandigarh, Andaman Nicobar Island, Daman, Diu. Those are the places where UGST is applicable. Otherwise this is SGST. As far as registration part is concerned, that we have already talked about before. Now when a person has availed credit, how the credit can be utilized? Input tax credit, we said if a person is liable to pay tax, he can avail input tax credit. Now input tax credit can be taken for IGST, it can be taken for CGST, it can be taken for SGST as well as UGST. Right? Now this is the credit. Now where this credit can be utilized? It can be used for, first use it for IGST, that is the sequence. If you have any more balance, this can be utilized for paying CGST, and if you have any more balance, this can be utilized to pay SGST as well as UGST both. Right? The credit of CGST shall first be utilized to pay CGST. If you have more amount, then you can utilize it for IGST. Similarly, this is first you can utilize for paying SGST or UGST, and if you have more, then this can be utilized to pay IGST. Right? So these two are giving you indication that the amount of the tax paid to the central government cannot be utilized to pay tax to the state government, and the tax paid to the state government cannot be utilized to pay the tax to the central government. Okay friends, so this is first part of the video. In the next video, I'll end the chapter. In that I'm going to cover up mainly on constitutional amendments which were necessary for bringing in GST.